Gold has a long history of use as a medium of exchange. As such, its supply, demand, and price are relatively consistent. Fiat currency has also been around for a while, and while its value can be somewhat predictable based on the issuing country and the economic circumstances it faces, exchange rates between countries tend to fluctuate and are somewhat volatile. Exactly what causes Bitcoin's wild price swings? Relax, billionaire crypto investor has covered you all. Before that, don't forget to hit that subscribe button. Since Bitcoin has only recently been introduced, its market is still in the price discovery stage. This means that until investors, users, and governments get past the initial growing pains and concerns, prices will continue to fluctuate. The crypto market appears to be crashing, or at least going through a major correction, as Bitcoin fell below $33,000 for the first time in around 12 months, along with Ethereum and Cardano. The old investment adage, buy the dip, may be luring investors into the volatile cryptocurrency market in the hopes that the current downturn is just that and not the beginning of a long-term bear market. Major setbacks. Bitcoin's price has dropped by over 20% in the last month, from over $54,000 to around $32,000 at present. Its highest price on the market was $69,000 in November of 2021. Losses of more than 50% are considered to be very serious. Ethereum, ETH, dropped to around $2,400 over the past month, in line with Bitcoin's decline, while Cardano, ADA, dropped by almost a third, 32%, to $0.69. There hasn't been a drop in value quite as severe as the one in 2018, when Bitcoin lost 80% of its value. But experts warn that the situation for Bitcoin holders could still worsen. These kinds of losses are what have prompted the Reserve Bank of India, India's financial regulator, to issue repeated warnings to those considering investing in cryptocurrencies. It warns that investors can expect to lose their entire investment and that there are no guarantees of returns. Inflation, recession, and war. Oleg Giberstein, the co-founder of the automated cryptocurrency trading platform CoinRoll, believes that the decline in cryptocurrency prices is due to the same stresses being felt by the rest of the economy. Everything is down, not just cryptocurrency, and the economic outlook for the next 6 to 12 months is bleak. Slow economic growth and high inflation put central banks in a tough spot. Thus, money is leaving risk-on investments like cryptocurrency and tech stocks. Concerning the question of whether the current downturn is the start of a long-term trend or merely a temporary blip, Giberstein predicts that the market could remain challenging for up to 2 years, but added that things could get worse during that time. Sam Kopelman, CEO of cryptocurrency exchange Luno, agreed that Bitcoin and other coins' misfortunes weren't happening in isolation. Falling below $30,000 leaves Bitcoin on the precipice of a key support level. If Bitcoin breaks this support, it may continue falling to $25,000. As global stock markets experience their worst day since June 2020, investors dumped assets across the board. The consequences of escalating U.S. interest rates and European military conflict are causing volatility in the market. The Reserve Bank of India, RBI, released inflation data last week, which may have had repercussions on interest rates and, in turn, cryptocurrency prices. Should one buy the dip? To buy the dip is to act on the belief that short-term declines in price are due to random fluctuations that will eventually be corrected. The goal of dip buyers is to profit from a reversal in price by acquiring assets at a discount and selling them when they recover. Due to the unpredictability of the cryptocurrency market, it is not a good idea to buy cryptocurrencies during a dip that could turn into a long-term trend. It's possible that prices will rise to where they were before, but they could just as easily fall further and leave your investment in the red. If history is any indicator, the current dip could recover like it did last year, when prices fell to similar levels before recovering to pre-dip levels and even peaking in the autumn. Bitcoin prices in particular appear to exhibit some seasonality, with a drop in value in the spring followed by a recovery in the early summer. Although historical performance is no guarantee of future results, this is especially true in the volatile world of cryptocurrencies. Oleg Giberstein recommends that people who are serious about buying the dip set aside a fixed amount of money each month to invest in Bitcoin or Ethereum, and not worry too much about what might happen to their investment in either cryptocurrency over the next 2 years. Cryptocurrency investors had an even better 2021 than stock market investors did. Some cryptocurrency coin values increased by as much as 7,000%, giving early adopters and investors phenomenal returns. Bitcoin and Ethereum, the two largest cryptocurrencies, saw gains of 35% to 40% in 2021. Although the path followed was not a straight line. In April, the price of Bitcoin reached 51 lakh rupees, but after Elon Musk tweeted his concerns about the impact on the environment and China cracked down on crypto trading, the price dropped sharply by more than 50% in May and June. There was a precipitous drop of 30 to 40% in the value of some cryptocurrencies in a matter of hours as panicked investors dumped their holdings. The price of Bitcoin climbed back above 54 lakh rupees in November, after buyers came back in September. Now, at 39.91 lakh rupees, it is up roughly 32% from its low point at the start of the year. Predictions for the year 2022. Government policies will have a significant impact. The largest cryptocurrency market, China, halted all trading in September. This stance, analysts say, will further isolate China from the rest of the world as blockchain technology becomes more widely used. The government of India has been working on a bill to regulate the purchase, sale, and exchange of virtual currencies like Bitcoin and Ethereum. The controversy surrounding farm bills derailed plans to introduce the cryptocurrency and regulation of official digital currency bill during the winter session of Parliament. Essential guidelines to keep in mind. The lack of debate in Parliament has not dampened investor enthusiasm for the bill. As a relatively new asset class, cryptocurrencies lack the necessary information for a thorough fundamental analysis. Consider these guidelines before venturing into the unknown. Many cryptocurrency coins have increased in value by 5,000 to 6,000% in recent months, so even a modest investment could yield a significant return. But don't let the numbers fool you. The same rule applies as with any other investment. Never put in more than you can afford to lose. Don't put more than 10 to 15% of your portfolio in cryptocurrencies, even if you're willing to take on a lot of risks. Investors need to be able to handle extreme volatility because this is a high-risk, high-reward game. The drop in May demonstrated that a drop of 70 to 80% in one day is possible. Remember that even the price of Bitcoin, a blue chip, has dropped by 25% since its November high of 54 lakh rupees. Only those who can handle large swings in price should even consider trading in this market. There is currently no oversight in crypto market, so it's important to only use reputable platforms. If you want to make sure your investment is safe in the event of a regulatory setback or the promoter company going bankrupt, you should invest through a reputable platform. Investment through a foreign platform may necessitate stricter adherence to tax regulations. Don't rely on rumors. There's a severe lack of trustworthy information in the crypto space. A lot of investors trust social media posts that haven't been verified. There are WhatsApp groups full of accomplices who will attest to the veracity of a self-proclaimed crypto analyst's claims. These analysts lure unsuspecting clients in with promises of high returns in exchange for a fee, and then use them as bait in pump-and-dump schemes. Pay attention to the blue chips. Just as there are blue chips, mid-caps, and penny coins on stock exchanges, there are in the cryptocurrency market. You shouldn't give in to the temptation of buying rare coins at bargain prices. Larger coins are more likely to remain in circulation, so their higher price is offset by their greater stability. You don't have to worry about the cost because you can make partial purchases. Bitcoin and Ethereum are the industry's benchmarks, setting the tone for the entire cryptocurrency market. Please share your thoughts on the recent Bitcoin price swings in the space provided below. As for me, I'm calling it a day. We hope the video was entertaining. We can't do this without our viewers, so please subscribe to our channel to see more of our incredible videos.